I'm Catherine Ross, and I'm here live from the NYC with Jim Cramer. Jim, it's good to see you. And thank you. Before we jump into what we're going to cover today, we have got to address Elon Musk's newest tweet to you.
Oh, it's funny. You get up and you're trying to figure out, okay, what is the Disney movie? How much Avengers is going to make? And then you see a couple takeovers, and you look at the Anadarko thing, and you're tweeting, and then boom, I get the ride post from Elon about whether I am a simulation. And what I really liked about it, candidly, is post Friday, where he basically got a very, I think, fair deal with the SEC, where he's allowed to tweet about things beside he can't tweet about the fundamentals of the company, which is good because of all the disclosure rules that people have. I think it's good to see that side of him. Look, I think he's brilliant. I am in awe of what he's done, both in space, but of course the car. I love the car. I put at my inn, put a charger up immediately because I just felt I want that customer. If it takes me to be the foil, I'm fine.
Elon wants proof that you're real, and I don't know how else to prove it.
You're
real.
It meant nothing. It meant nothing. So that's why I said it's elusive that I'm real. But it's good that he's having fun, and I say that because there is, I think he may be the best we have in terms of when you look at what companies are doing, versus Facebook. What is Facebook accomplishing? What are they doing? Now, I think the world of Tim Cook, but I think that Elon Musk needs to be preserved and stop being involved in legal. Have a little more fun on Twitter, right? I don't mind any of the fun stuff he does, and just keep being inventive because that's the treasure.
Elon, let us know what else you need, because he's as real as it gets, and I don't know how else to prove that.
It's funny. I have historically been considered a dollar sign represented by a man, and being someone who really just cares about return. And I've tried to reassess myself. I was going over with some CEOs this weekend. I want to reassess myself of how much is just growth, how much is return, and how much should be changing the world positively. And I think Elon's put that ladder pretty high.
Now, after the bell today, we've got Alphabet earnings. Now,
I'm concerned. I'm concerned because there's always something. Jeff and Zeb, we know this. We have on it for our travel trust. There's always something that makes people feel that it's not as good. Stock goes down, then it spends the rest of the quarter going to the next quarter, and then we find out there's something not as good. It's never perfect because there's so many moving parts. But what people really wanted at all times is for them to have monetized all these things that they have, whether it be healthcare, Verily, whether it be YouTube, and that's beginning to happen. So it could change how people describe the company. That's what you have to hope.
Alphabet's got its hands in a lot of different pots, but what is one thing that investors should look for in the earnings report?
All right, they need to see whether we need to hear that the service revenue stream from YouTube, coupled with what perhaps maybe they buy from sports, is meaningful to earnings, because right now it's viewed as an ad play and about how much it costs for them to get different advertisers, and it's got to get away from that dynamic, because that dynamic is one where you're going to have you're hostage to the amount of money spent for advertising, which is not going to grow the way people think it is.
So you've got your one tip from Jim Cramer, but Alphabet is also Real Money's stock of the day, which means
that some good stuff.
Exactly. We've got Stephen Guilfoyle, we've got Kevin Curran. They're going to be covering Alphabet up to the earnings, wall-to-wall coverage. Go check it out on realmoney.com. Now, Jim, I want to jump over to Disney. It's been a big weekend for them. You mentioned Avengers Endgame. Yes. That's one of the highest grossing.
I did not get to see because I went to the
haven't seen it either.
And I really want to. I was just very glad that my wife didn't, but she was working at the Longshoreman, which, by the way, since we got the 8.2 from One Bite, you all know the rules, changed it. You couldn't get in Saturday night.
Congratulations.
My hat's off to David Portnoy, who's built such a great franchise, and I regard as so much fun, even though he's from Boston.
Now, Jim, where does Disney find its next all-time high?
Well, look, I think that Disney, there should be profit-taking here, and the reason why is that tomorrow the movie will not come out again. But what's happened is that the Avengers has made people go back and look at the whole series, and that plays into the Disney Plus, which is going to be important. David Faber talked a lot about ESPN. Let's not forget that ESPN peaked. What I thought was very important was that we didn't forget that ESPN peaked. We just had something else to talk about, which is a movie schedule that no one went up against Avengers. Now that's not going to happen every weekend, obviously, but Disney has enough product that they could become basically the football game that happens every weekend that people watch.
Disney hit its all-time high. Microsoft hit its all-time high. So I got an investing education question for you.
Sure, the banks are doing well today, which I have to do more work on because I don't get that.
Why do you think? Any speculation?
There's been constant revaluation of companies that are selling at 9, 10, 11 times earnings. I went back over the Bank of America and Goldman Sachs and Morgan Stanley quarters because I thought I must have missed something because I thought they were so good, but it looks like I didn't. Now they're starting to move.
Just needed some time. All right, so Jim,
That's a very good way to look at it. Needed some time.
Now, my investing education question for you today is an all-time high a signal for investors to sell?
Wow. This is something that I have often thought about, and a lot of it has to do with playing with the house's money. We used to talk about go out. I used to gamble, used to go with my mom to the casinos. My mom was a gambler. And every time she won, she would take it. She said, Jimmy, time to go buy a cashmere sweater with some of the winnings. And maybe some people, you should be going and periodically. Just remember the cashmere sweater and Grandma Louise. And then I think that you also have to recognize, because you want to play with the house's money, that my recommendation for stocks that hit all-time highs is that you get the 5 to 7% pullback, and that's your chance, not the 2 to 3.
I want to move on because I want to talk to you about the three big market movers in this market. So what are they?
Well, I think that what we're seeing is McDonald's ahead of the earnings, something that's really, really important because McDonald's has run too much, given the fact that QSR, Burger King, the Tim Hortons didn't do as well as people thought. I think that matters tremendously. I think Apple, obviously, because they report tomorrow. You would love to see that stock down ahead of the quarter. That would be very, very meaningful. It doesn't look like it's going to do that. And then General Electric. I have 3M on tonight on Mad Money, and GE and 3M face these really existential issues. The existential issues is there real growth? Because growth is what drives companies. Look at Disney. So I'm looking at those, and of the ones that I think have the most downside, because all three I'm picking as possible downsiders because they've moved up ahead because of last week being strong. The one I am worried about is General Electric. And then again, I am a creature of the excellent work that Steve Tusa does. Now, I know that people might say, Jim, you rely too much on him. Well, if you've worked with him and talked with him, you would know that you rely on him because he has the most rigor. And he makes me concerned about GE.
All right, so those market movers again, those market movers are McDonald's, Apple, and General Electric.
What's all stocks that are up a lot that I regard as vulnerable. Action Alerts owns Apple. They are the stocks that I think advanced on the backs of other companies. And that's what GE, I would say would be at 8 if it weren't for the strength of a lot of other, United Technologies, Honeywell, because aerospace is the play there. But GE is power, and power is in huge secular decline. I mean, we have a lot of companies, by the way. I don't know if you see that you read about all these different projects for power that were canceled, and that's because one of the great stats that I have in my head is that light bulbs, the change in light bulbs to the light bulbs that don't use much electricity has caused power to go down dramatically. I have a guy who just does power stats for me, and it's not conservation just overall. It is light bulbs. They have caused a tremendous shift in the amount of power we use. Remember, 40% of power, Honeywell would tell you that a huge percent of power is heating buildings. Another huge percent of power is light bulbs. And we're taming these, and that's something that has caused power to be very weak. And that's not coming back. We're not going to switch back to bad light bulbs.
Jim, before we go, I got to talk to you about last week.
I was afraid of that.
Why is Disney down?
Well, because the Avengers doesn't come out again tomorrow.
So it's just been bought up?
Yeah, look, this is a good case when we're talking about all-time high. 5 to 7%, you get back in.
All right, so Jim, before we go, I've got one. I want to congratulate you first of all for last week. The Action Alerts Plus portfolio had a great week.
Thank you. Yeah, and I think that we benefited from a lot of the change of a lot of things that people wanted in terms of the sweet spots. We've had some good, plus Anadarko obviously has been very, very good for us, and
which we're going to talk about over on Action Alerts Plus.
And I like. Look, we're ripe to miss. CVS goes to 48. I'll look like a jerk. But what we did was we had a lot of companies that truly delivered great quarters, and it's because we spend so much time working together on trying to be sure that we've got the thesis down, and there's You got to have humility. The big game is a humbling game. I know some people don't like to be called a game, but we're struggle. But even in Abbott Labs, which people thought was a mistake of ours, it has come all the way back. And I'm more proud of the ones that have come back than the ones that just shot up. But Disney obviously was a very big position, and we're thrilled. Microsoft, a very big position, and we're thrilled.
Now, during your April conference call over on Action Alerts Plus, you told club members exclusively that rule number 1 for earnings is that you always have to listen to the entire conference call. Now, before you pass any judgment on the company. And your call taught club members what they need to pay attention to with a stock such as Kohl's, and we saw that win last week. So I guess
Kohl's was the most obvious. Now, let me just say this about Kohl's. Target got upgraded twice today because people felt, wait a second, Amazon same day isn't that bad for Target. Amazon and Kohl's are partners. Now, that stock do you know that stock is the most heavily shorted stock of the department stores? So we've chosen to not sell, but to buy more, because I don't think people realize what Michelle Goss, who's the CEO, has got going. The stake, the warrants for Kohl's, is the beginning of what I think is the next phase of a department store that is going to have the best omnichannel. And I just think people keep underestimating the franchise, and it's a buy. I mean, it's just a huge buy right here, Kohl's.
All right, if you want to learn more about the exclusive investing advice from Jim and his team, head over to actionalertsplus.com. And as a matter of fact, we are now going to jump over to Action Alerts Plus members only club video on actionalertsplus.com.
It's great to have you back.
Thank you.
And tell people where you went and what you did.
I went to Mexico. I went to Cabo and then Cancun. I saw a lot of Mayan ruins. They were amazing.
Yeah, that is just a great trip.
Yeah.
Done it many times, and I love Mexico. I've been to Mexico, 5 times in the last couple of years. I'm going to go back again in June.
I was drinking mezcal and thinking of you.
Yes, it is extraordinary. People extraordinary. The country's extraordinary. Very underrated place to visit. We have a place in San Miguel de Allende, which has been 2 years in a row voted by Travel and Leisure magazine as the #1 city in the world to visit.
Well, now I know my next vacation.
San Miguel de Allende, and that's why our other restaurant's called Bar San Miguel.
All right, guys, I'm Catherine Ross with TheStreet. We're now heading over to actionalertsplus.com. We'll see you there.